Hello traders, welcome to Investor.com's How to Trade Binary Option series. And in this video I'm going to show you a very easy way to trade the weekly expirations. And the reason I'm going to show you this strategy is because even if you're a scalper or even if you are a day trader, you can add this strategy to your actual strategy combo, and by doing it you are going to be profiting even more from the markets. Now, the first thing we're going to do is we're going to go to the 4-hour chart. And the first rule of this strategy is that you need to trade it on a Monday. Okay? Why? Because we are going to use the weekend gap to trade it. Okay? Now, you can see that here's where the weekend gap is on the week prior to this video. Okay? We closed on Friday on crude oil at 49.38, and we opened on the Sunday at 51.02. Okay, we are not going to be using indicators with this strategy. What we're going to be using is levels of support and resistance, or previous levels of support and resistance. Okay, now you can see that we have the gap here, and normally what the price does is that it will open higher and we will go down, close the gap, and then continue its uptrend. Now this is the normal thing, but as you can see right here, the gap didn't close during Sunday price action or Monday price action. So what you're going to do right here is this. Okay, market opens at 51.04 and then moves higher. Okay, it breaks with the previous highs and breaks with this level of support that you were looking at, and then it comes back, tested this once, twice, and when you have a break of this structure, you are going to buy a call option for the weekly expiration. Now, the reason we're going to buy call options for the weekly expiration is that, first of all, we didn't close the gap, and second of all, we broke with these previous highs, and then we tested these highs as support before moving up. Okay, now you can see that price closes for the week at 59.38, which means that it closes $9.38 higher, or $8.38 higher, which means that this weekly option expires in the money. Okay, and you can do this with currency pairs, with indices, and with metals and energy. Okay, now if we go back, okay, and let's look at this movement right here. Okay, now you can see that the gap is right about here. Okay, now on Friday we closed at 49.66 and we opened on Sunday higher, okay, at 51.12. So if you think that just because price open higher we are going to buy call options on the weekly expiration, you are wrong. You need to wait to see what happens. In this case, you can see that price comes all the way down here and closes with the gap. Okay, the gap close was at this level, and you can see that this candle closes with the gap. Then we have a bullish engulfing candle. Okay, now this is not a signal to buy call options in any case. Okay, this only means that we close the gap, and traders that trade the gap are taking profits right here. Now we have two areas of interest. We have these highs and we have these lows right here. Okay, and what we're going to do is that we are going to look to trade the short side when we break to the downside. Okay, now you can see that right here price breaks with this low. So what we're going to do is we are going to be buying put options at this level right here. Okay, we buy put options when these lows break, and as you can see right here, this option sadly expires out of the money. Okay, because we had a retest of the same gap close. But the thing about the weeklies is this. Okay, you are going to be trailing these weeklies. This means that if you bought a put option right here, and you see that for instance price makes this strong move to the upside, you are going to sell these weekly options at a profit when this happens. For instance, in this example, when you buy the call options or the weekly call options right here, if price breaks with these lows, you need to sell those options at a profit before price comes back and erases them out of your paper trade. Now, this is what you're going to be doing. You're going to wait for the weekend gap, then you're going to see what happens. If price doesn't fill the gap and moves and continues to the upside, breaking with the previous highs, you are going to buy call options, and you are going to wait, and you are going to trail those levels, meaning that if price is at this level right here and it breaks to the downside, you are going to sell that option at a profit. And in this case, or in the other case, if price fills the gap and then continues to the downside, you are going to buy put options. Okay, and again you are going to be trailing those options, meaning that if you have a big move to the upside that breaks with the previous highs, you are going to sell that option at a profit. And this is the way you're going to be trading weekly expirations. Okay, you are not going to blindly wait until this option expires. You are going to be looking at what price does, and if price breaks with a serious level, you are going to sell them at a profit. Okay, and the reason you're going to sell them at a profit is because of this example. You can see that right here, this option is clearly in the money, but when it comes all the way up here, it's out of the money, and this option expires out of the money if we let it run through expiration. So you have to be very careful on what you do, and it depends on what price does on Sunday and Monday morning during the London session, that you are going to decide what to do with your weeklies.